I'm Keon, a senior research analyst with Lipper. I'm here to speak to you about fund flows activity for the week ended Wednesday, May 20th. We'll start the week's report by taking a look at the overall results for our fund asset groups. Equity mutual funds and money market funds both suffered net outflows as $5.6 billion and $1 billion left their coffers respectively. Conversely, on the other side, we see that taxable bond funds and muni bond funds both took in net new money of $5.2 billion and $1.2 billion. We'll now take a quick look at the week's market activity, which did have some impact on our flows results. Equity markets experienced healthy gains this week. The NASDAQ Composite, Dow Jones Industrial, and S&P 500 index appreciated 5.8%, 5.7%, and 5.4% respectively. So far, for the second quarter, the NASDAQ, S&P 500, and the Dow all have double-digit percentage gains with increases of 21.8%, 15%, and 12.1% respectively. The markets took their strength this week from a few different sources: hopes for a vaccine for COVID-19, cheerleading and support from the Federal Reserve, and the U.S. starting to reopen for business. Moderna, a biotechnology company, released news on Monday, May 18th, that its Phase 1 trial for coronavirus vaccine had showed promising results. The Phase 2 trial for the experimental vaccine has already been approved by the Food and Drug Administration. Moving on to the Fed now. In an interview on CBS's 60 Minutes, Federal Reserve Chairman Jerome Powell stated that in the long run, and even in the medium run, you wouldn't want to bet against the American economy. Powell remained optimistic that the U.S. would not fall into an economic depression despite the potential for the unemployment rate to go as high as 25%, and pledged that the Fed will use all of the tools at its disposal to continue to provide support to the economy. With the Memorial Day holiday being right around the corner, all 50 states have now started to reopen in some capacity. Coupled with the Federal Reserve's actions, this has raised investors' hopes for a rapid economic recovery for the country. Let's turn our attention back now to the week's fund flows results and examine each of the aforementioned fund asset groups in more detail. We'll start with the equity mutual funds group. The $5.6 billion net outflow for the group was its fourth straight. The net negative flows were almost evenly split as domestic equity funds and non-domestic equity funds saw $2.9 billion leave and $2.7 billion leave respectively. The net outflows on the domestic side were led by funds in the S&P 500 index and the small cap core funds peer groups, as they saw $1.2 billion and roughly $800 million leave. For the non-domestic equity fund side of things, emerging market funds suffered the highest net outflows at $806 million. We'll take a look at our equity ETF group now. Whoops. This group had slight net inflows last week, $681 million. They were paced by the iShares Russell 2000 ETF and the Invesco QQQ and the Spider Gold, which all had net positive flows in the neighborhood of $2.7 billion for the Russell product, and followed by $1.4 billion and $1.1 billion for QQQ and Spider Gold respectively. These large increases were nearly offset by the $3.8 billion net outflow from the Spider S&P 500 ETF. We'll move on to taxable bond funds now, starting with mutual funds. They experienced net inflows last week. They took in $5.2 billion in net new money. This was its sixth straight weekly net inflow, and the charge was led by core bond funds and ultra-short obligation funds, which saw their coffers grow by $1.5 billion and $1.4 billion. We'll look at taxable bond ETFs now. Net inflows here as well, $2.7 billion overall, the eighth straight weekly net inflow for the group. Net inflows were led by the iShares iBox Dollar Investment Grade Corporate Bond ETF and the iShares 20+ Years Treasury Bond ETF, which had increases of $920 million and $475 million respectively. We'll move on now. Let's take a look at muni bond funds. Net inflows here again last week to the tune of about $1.2 million. The second straight weekly net inflow for the group. As we can see, the net inflows were led by peer groups from the national muni classifications, as we had short muni debt funds and general muni debt funds taking in $438 million and $231 million respectively. Our last group to look at is money market funds. This group had net outflows last week, and for the first time since the coronavirus crisis started, money market funds saw money leave. The group's $1 billion net outflow was its first in 12 weeks. During the previous 11 weeks, the group took in $1.1 trillion of net new money and set several weekly records for the largest positive net flows ever. Interestingly, this week, only one money market fund's peer group suffered a net outflow, but it was enough to outweigh the total net inflows from the 5 other money market fund peer groups. The group that had the net outflow was institutional U.S. government money market funds, which saw about $20 billion leave their coffers, while the largest net inflow belonged to the institutional money market funds group at about $8 billion. Well, that wraps up this week's report. If you'd like to take a closer look at the fund flow data for yourself, please go to our website, www.lipperusfundflows.com, and please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.